Good afternoon. My name is Scott Redler, Chief Strategic Officer at T3Live.com. It is Monday, the start of a new week, and there was weakness across the board. Weakness that you can't say, oh, how did this happen? Weakness that is basically follow through to what we've been seeing, the type of action that has been in the market for multiple weeks, almost even months. But at this point, we're getting a little bit of acceleration that is actually getting a little bit more interesting from a trade standpoint. There's many different ways to approach the market, whether you're an active, intermediate, or even macro player, all depending on your time frame. For us, we're in the active intermediate spot, and we've tried to be in relative tactical mode, looking for longs and shorts without a portfolio on ever since all the technical damage started adding up. And if you take a quick look at the chart of the SPX, you will see that where did that technical damage start adding up, or where did it trigger? Right here, you have a nice inside wedge within a 7-month channel. Here's where we broke the 8 and 21-day moving average, which is typically where you get out of your swing longs. Here's where you broke the 200-day, where you get out of a ton of longs. Well, anyway, we broke that, that channel to the downside, and there were lots of clues well before this in other sectors, whether it was the diamonds below the 200-day, the Russell below the 200-day, the IBB head and shoulders top pattern, you name it, there was clues there. So hopefully, you didn't get caught in this mess. And if you didn't, you actually had that little, flash crash Monday where, if you came in flat, there was a buyable bounce. Okay, so question is, as a trader, when you're trying to figure out what's next, there are different types of patterns to maneuver. So first part was after this break to the downside, what would be next, right? What was next here? You had an inside wedge, which means there's a pattern of indecision where most people are trying to figure out if this downside move creates a flag for continuation, or do you actually even get a retest first? So, prior to that Thursday, which was kind of cute, while the buybacks were still going on, you had a move to right here to the upside of this wedge. So that could have been your first entry long. Then you had a day 2. And then going into the Fed, to figure out whether or not you get put off or lift off, you wind up getting this topping tail into the resistance there, which was a 2020. So from there, that is your sell signal, that is your retest. It could have went a little bit higher, it didn't. Right there, you're out of the way. So at least to figure out what's next, and then this is what's happened since. So then it's almost like you go this way to figure out, do you get downside here, of the downside of this wedge? And basically your first clue to get out of Dodge was right here when we broke below this 1953. Okay, broke below 1953. That is now your trigger to the downside of the wedge. And almost like this to the upside, you have this to the downside. So let's just fast forward to where we are now, and you'll see that you could write down today's pivot of 1879. That was the low of the day. And then right here you have the August 24th lows, which is 1867. So all we know heading into tomorrow, if you're putting together a game plan, because we don't know the type of gap we're going to have, is this low and this low. Okay, and then obviously, I guess, resistance would be about 1920, and then this spot. Okay, so if they gap them up, people might try and sell that, and that is a little bit closer to 1908 and then 1920. But so this is like this range that you have to have thought in your head. But you don't even need to really go that far, because we'll figure out what type of open we have in the morning. But at this point, you have the oscillator at minus I think 55, which is very oversold. Not extreme, but enough where you have to think twice about being short overnight. I mentioned on Twitter that I think if you made money short, especially from that topping tail on the day that the Fed did not lift off, or even on Friday when the market failed into a lower high in 1950, that you probably want to at least cover some, and if you're going to trail some. But if you also don't want to take pain and you want to have a clear mind tomorrow, it's hard to be long in this spot, considering that we might get that test of the August 24th lows. So, I'm going home thinking, plan A, B, and C. What does that mean? That means that I think everyone that if you had the TV on today, you probably heard 100 different times that we have to test the August 24 lows. We have to, which it would have been better if you thought that, on Friday, or you thought that when the Fed didn't do liftoff and you shorted those areas or sold some risk or sold bounces there versus, thinking about that today. But I'm sure you had a little bit of a thought process before, especially if you're in my note. So, meaning when everyone says something's going to happen, it probably doesn't happen the way everyone says. So either we don't get there. So if you're short saying, I'm going to cover at the test of the lows, you don't get the chance to cover. Or if you say, I don't want to buy here because we might get there and we go up from here, then you're being conservative, which actually I'm being conservative right now because I want to wait just in case. So sometimes you don't get there. So that means you hold above the August 24th lows. Then sometimes you get there, get a quick, cool bounce, but then it doesn't gain any traction, and then you break those lows. So this way everyone trading long versus those lows gets thrown out the window, and then that causes even a bigger capitulation move, into bigger support. If you look here at the SPX again, you'll see that you go to your weekly chart, and you have this broken trend, which I've shown you guys on Twitter many times. This was from back here. This is when we broke this spot, and look how nice and tight that was right there. And then you have this zone right here. So you have two different spots. You have 1867, and then you also have this spot, which is the 1820, which is the October lows from 2014. So this is the zone if they want to play with you, breaking this spot. Okay, but then there's also, you can't rule out, besides that, here actually you could draw this from here. I'm sorry, there's a little extra lines. This was at 2011 spot, which you could kind of get in here too. So I was talking more of the macro spot from you go to all the way back here, which was the 2009 low, and that would be a test. If you go kind of draw your trusty line like this, a little bit into this too. There's a heck of a lot of stuff going on right into here. Okay, so the question is, does it hold this spot, which is that 1820 to 1867, or does it come back, into this spot and try and test the 1770? But overall, we do know what's changed. What's changed is, buying every dip and having a portfolio approach and going to sleep at night with, tons of positions because of the carnage that's taken place. Carnage that started well before, this breakdown. What happened before? Okay, we'll get into that. The diamonds and the transports were well below the 200-day, and they were below the 200-day for more than a week. So, let's not rehash. I just want to talk about that August 2024 lows and see who's there and who's not there, and where those are, so you can write them down. So the S&P is not there, okay, or the spiders are not there. If you go to the Russell is there. And you know what? The Russell, if you go back to the daily, was one of the first sectors below the 200-day. So if you go to the Russell, which just makes sense as a trader, here is your false breakout. That's your get out of Dodge, ticket. This was that momentum trend that broke right here when it went below the 8 and 21 day. And when things go below the 8 and 21 day, especially growth areas, that's when you get out of swing trades. Went back below, retested, and made a lower high and failed. And then here was when it was below the 200-day. So right here, it probably was one of the first sectors to get below the, what's this date? This is August 20th. So this also came below the 200-day on the 20th, which was before the crazy move down that you saw on the 24th. So this was on that Thursday below the 200-day, giving you some clues as a leading indicator that the weakness was coming. And then it came back and retested, just like everything else, broke above this and then failed quick. And then you had your gap down, and we talked about this ascending little channel here. And this right now closed below, or right at, that low. So if this sector, which was, this was, look, August, what is this, August 19th. On August 19th, just to, just go over a few things, the Russell was below the 200-day. That's August 19th. Go back to the spiders. The spiders, where's August 19th? August 19th is above the 200-day. So right there, if you said to yourself, ooh, the Russell's below the 200-day on August 19th, we're about to break below the wedge here, I should get out of the way. You would have been out of the way, when this happened the day after. That's why you look at sectors as leading indicators. And if you didn't, you added another day for when it did close below the 200-day to get out of dodge that Thursday well before the Friday weakness into that Monday, flash crash. So right now people are like, oh, do I buy the Russell because it's testing the lows? I don't think so, because if it's the first sector back at the lows, chances are if the S&P goes to the August 24th lows, this will push further down, and you probably could get a better buy, I guess, somewhere into here if you're looking to trade some kind of bounce. But as of right now, all you know is today's low, because we have no idea how we're going to open tomorrow. That's 107.88, below the August low. Okay, so if this is a leading sector again like it was up here, then tomorrow will probably be a down open. The bios, which have all, been in the news, it's been a broken sector. This also broke right here. People are like, Red Dog, where could you have seen the first shot across the bow for the bios? I said basically here. This day, when it engulfed this entire range, broke below the 8-21 day, that was the first true sign that the bios could be in trouble. And the confirmation was, once it broke below there, it never got back above it. Sometimes it's broke below it and then it comes back up and means nothing. This time it broke below it, and then you actually had this head and shoulders formation, okay, which gave you some clues that a down move was coming. And I think I gave that midday meeting on Thursday, which you could look up on T3 Live, showing it and saying we could get a measured move from 400 to 360 to 320, and basically, it overshot that and then came up. And most recently, this is the day that Clinton said, they unfairly price everything, and that was your, get out of the way, because this rally is now over. If you started shorting it too early, who knows if you made it all the way up here. All you had to do is wait for this wide range engulfing bar, which we saw, that could have got you short. Anyway, not a friend since. And then Friday it let us lower when it crossed below this. There was a little two-way action today, but still, this one, where is that? This is basically touching the August 24th lows. So if you make a checklist, the IWM is through it, the Russell is touching it. So we'll see what happens tomorrow. And again, the spiders are well above it. Okay, they're well above that tail. And look at the diamonds, actually. The diamonds were very weak to start. And the diamonds, which were below the 200-day for quite some time, actually is right on a major spot right here. So this is your 159. Even if it doesn't come back and test this, because a lot of stocks were halted, a lot of things the market makers didn't match up, you at least could see something like this. Okay, and look how clean this topping tail looked, which is your get out of Dodge signal. And look how long this was below the 200-day. This was below the 200-day. I showed you the Russell on the 19th. This got below it on August 3rd. So for about 2 weeks before this fell apart, this was below the 200-day, giving you signals not to be long or have exposure to the Dow Jones. Now we'll see what happens here tomorrow. This is your resistance going forward, support. And if it were to break below this, you have an air pocket down to this 157.50. When I was doing the morning call today, I was trying to figure out what could, be weak and what would give us clues that weakness could settle in. I was like, if the banks still have a little bit of a bid like they had on Friday, chances are we can't sell off hard. And if they hold Apple up, chances are we can't sell off hard. From 9 o'clock to 9:30, I walked into the back and already Apple was down 80 cents. So right there it showed me that they might come after it. And then the banks that gapped down never filled their gap. So those two things gave me some clues that today was going to be a down day. Not a bad day, because if you're short, it's a good day. Just a down day. Same way the lows of the IBB, which were 304.50, got broken very quickly. In the first 15 minutes, that 304.50 got broken, giving you some clues back up. So anyway, you go to something like this, Goldman Sachs. Goldman Sachs made a lower low. Goldman Sachs, gapped down, traded below this little pivot, which was support 1 for my note, broke below this and closed on the dead lows. And look at this, below every moving average. This has been below the 200-day for a long time. This broke this trend well before it. Broke below it here, couldn't get back above it. Here was your outside day there, giving you a real active clue to get out of the way if you were quick, and then if you weren't quick right here when it broke this spot. But anyway, Goldman Sachs closing on the lows, and here is your August 24th low. So I bet you tomorrow I'm going to be writing down a lot of August 24th lows to use as pivots, whether we break below it and close below it and continue to the downside, or break below it, put in a low, and come back up and do a red dog reversal around this point or this point. So that's my thinking as of now. And look how clean this trend was here. Your active trend broken. So I'm sure the XLF is hanging on by a thread here to where you have a spot here, and then I don't know if this is a real print, but if it is, you have a long way down there from this spot. And this gap was never filled. So this shows you power to the downside for the banks. So there's that. I'm not going to go over that many other sectors. You don't need that many more. You know, you could trade the spiders, the diamonds. Oh, the Qs. Let me talk about the Qs. Because the Qs were showing some relative strength until you had this pretty gross day on Friday, which I talked about in the morning call, the outside day, where it opened up and engulfed and closed near the lows of the day. That's your get out of Dodge call. And then it broke below a few different points of reference, and now you have this one, you have this one, and then look how far this is off those lows. That's a long way down, but that's also when Apple was at 95. So we'll see what happened next, but all you do know is here, this is your trend. Look at this topping tail, write down this little thing. Topping tails give you signals to get out of your longs, maybe get short, especially if there's no quick bounce back, and now this is where we are. So this is your low, right down 99.69. Here's that spot. A lot of the names that we've been watching, also gave you those signals on Friday. Facebook, I talked about this morning, the first outside engulfing candle. Write down engulfing candle means possible change in direction, whichever way the engulfing candle goes. And Facebook had a big time engulfing candle right here, right? You look at Friday. I was long Facebook and got stopped out. I could have got stubborn. I said, no, this is the first time I've seen a candle like this in multiple weeks. And that if it were to trade below this, some guys will look to get short real quick or get out of the way there, or just it'll tell you that there's weakness to come, and this broke that fast. So quickly, in 2 days, that's how fast risk can happen. This bar right here gave you some serious clues. You didn't see a bar like that over 2 weeks. Boom, sell signal. And then it broke below the support, and now I guess we'll see what happens tomorrow based on today's low, and then we'll see what's next here. But overall, if you sold on this day, you were out of the way and maybe even got short. I know guys from Schoenfeld, shorted a lot of these type of engulfing days looking for extra weakness, and then they got them. Amazon also, first big engulfing day right here, right? Yeah, I haven't seen an engulfing day like this in a while, and that was right there, and that took back the 8 and 21 days, so that's your get out of Dodge card. You saw the same thing kind of here, first big day after like 7 or 8, and there was your second day. So now, we'll see what happens tomorrow based on the open. Here's your point of reference. But just look how fast this risk happened once it broke. Got to be quick on your feet. Google was acting a little bit weaker than Amazon, and it fell just even faster. Look at this big engulfing day. This one actually closed on the dead lows. So tried to open up on Friday, couldn't hold the prior high and close below the prior low. That is your sell signal. That's what you call an outside day and an engulfing day, 2 in 1. And now, I guess we have this tomorrow, and then we'll see what type of open we get to see whether or not, there's an opportunity there. Very sloppy. Netflix gave you a quick, red to green move and then ran out of gas, and not much to say here except for this downtrend is still controlling it, and you have support 1, support 2, and then here's your, where this is your August 24th lows. And I guess you could say this is somewhat tight, but if this were to break to the downside, it could be some trouble. Apple, it's coming into a key area, got rejected again at the 200. Look at this wall of resistance. Gave you a nice long last Thursday. I was long into Friday, and I sold some strength, got stopped out, and didn't really touch it today. Just looked at it for clues. And if Apple tomorrow gets below this 111.87, it could help bring the market down, because you have an air pocket to about 110, and then really, you have lots of room if it really wants to go. And there was some decent news on iPhone sales, and they ignored it. So now that that's out of the way, the shorts might get a little, I don't know, maybe a little bit of conviction here or some confidence. But another rejection into big resistance. So now the question is, will it go to the downside? So all you know is 112.44. That's pretty big support going sideways. And now you got to see if if it trades below this tomorrow, it could be the vehicle to help get the market down in order to get some fear where we could get some kind of viable bounce move. So in closing, there's lots going on, and there's been lots of signals to get you either in cash, which is a position, thinking tactical, which also has been working. The RDRs have been good for a bounce, and the H cell setup has been even better to short. You could short a rally and then short when it breaks through a prior low. I talked about the 190.56 pivot, which was last week's Thursday low. I actually got short today when it broke below that and made some money. That was your pivot to trade against. And when I say, SPX futures down 12 handles, you have, one pivot to look at, which was Friday's low, and then 190.56 is really important as last week's low, and we got there. And not only did it trade through it for a quick move to the downside, it came back up and got rejected there, and then it made lows. So there are ways to navigate adjustment areas and make money without any overnight risk too. So there's lots of ways to make adjustments and maneuver the market, but that's only if you take accountability, you get a plan, and use your resources. Thank you to everyone who came to the seminar in Atlanta. Hopefully, you learned a lot, and it's great to see people face to face and meet people from Twitter, and that's kind of what life's all about: meeting people and adding value and trying to navigate things where you help others and others help you, and that's what a community is all about as well. We'll see what happens tomorrow. It's going to be a long week, but if you're in the right frame of mind, you'll be able to embrace it, make money from it, and create the opportunities, or at least catch the opportunities. Have a good night.